Hey traders, checking in on the broader market. So the bulls got the follow through that we were looking for to give us our 2-day higher lows. Let's go to SPY. So SPY 2-day time frame, higher low has formed. High, low, lower high, higher low. Now we look for a lower high compared to 315.64. Adjusted for the dividend, that level is going to be a bit different, perhaps down in the upper 314s. We'll get that level when it comes into play. It's not in play right now. We had a big surge into the end of the month. Look at that volume. Huge move up, big drop back down into the close, and that is the end of the quarter. So July 1st tomorrow, no trading on Friday. And now I want to see a gap up open for bearish entries tomorrow. If I'm looking at a day trader perspective, short-term entries, I'm not making any bullish entries at this point. The time for bull entries was yesterday or first thing this morning on the breaks of the highs of yesterday. Otherwise, the move has been missed in my opinion, and I would be looking for a bearish entry based off of our resistance. And I want to see a gap up open for the bulls to get as extended as possible heading into that resistance. And that also means my risk would be lower. If I'm looking at just a simple trade, let's say 315.64 is a level that I would stop out on. If I'm going bearish, I want to see the price up at 313, very close to that level. So my risk is much smaller. But another way to go about it is just sit on your hands and wait for the break. And it's going to be the big one because it's going to dictate whether our monthly lower high has been set or not, in my opinion. If we take out these two supports, as far as I'm concerned, our monthly lower high is set and we have a monthly equilibrium to be watching. And if we take out resistance, then the bulls keep their full control and that's it. The bulls keep full control. So we have our lead tech names, Amazon, Apple, Microsoft, etc., forming the daily higher lows. I will make a very simple if-then statement. If these names hold their daily higher lows established yesterday at the low of the day, then the S&P 500 will not break that pattern bearish. If we're going to see that pattern break bearish, we will have to see the daily uptrends lost on Amazon, Apple, and Microsoft, all whom, I guess it's not a person. Microsoft just hit an all-time high. I didn't know that. So saw that in the last 5 minutes. All-time high for Microsoft. Apple and Amazon are trying to get close to those levels and see a new all-time high as well. So we have to either reject from those all-time highs or break them with no follow-through and lose the low of Monday support to enter downtrends. Look at Apple. If that were to happen, there's no sign of it right now. So the burden of proof is on the bears, absolutely. But if that were to happen, it would be the first confirmed daily downtrend since the COVID bottom. It would be extremely notable. That is a must. If we do not lose the daily uptrend in these lead tech bulls, bears got nothing. IWM, 2-day higher low set. Key resistance 146.69 is in play. We're about 2% away from that level, a little more than 2%. And again, unless we see some notable bull volume, I am watching for rejections from those levels initially and tightening ranges into next week. QQQ, daily higher low set, all-time high. Back on watch, I exited my swing on QQQ on the loss of the 5-minute uptrend, which happened right about 1 p.m. Eastern. So missed some of that bull move at the end of the day, but again, just locking in gains from the lows of yesterday. And perfectly fine leaving a bit on the table because I don't ever really expect to nail tops and bottoms in my trades. I just want the meat in the middle. So we're looking at the all-time high of 251.15. And again, we would have to reject from that level and then break the low of Monday for the bears to take over on QQQ for the most notable time since that bottom. Healthcare, 2-day higher low has formed. 101.34 is key resistance. And we're watching for a lower high to form compared to that level. We're only about 1% away from that resistance. So maybe closer to that level being in play. And that might be a little bit of a clue. Whenever I see a major sector that has a key level nearby first, for example, SPY is multiple percent away from its resistance. XLV is 1% away. So if the name that is closer struggles and rejects from resistance, that increases the odds that we're going to see SPY reject from resistance as well. So tightening 2-day range on XLV. XLF had the bear break without much follow through, but we know we're looking for a lower high on this bounce compared to 25.12. XLF is definitely favoring the bears slightly, but we are seeing it matter less and less in SPY and the broader S&P 500 because it is weaker, in my opinion. They know what they're doing, trying to keep the S&P 500 as strong as possible. Keep the strong names, ditch the weak names. And that's what's going on with these sectors. Biotech sector, daily higher low is set. We did break 112 resistance right at the end of the day. So now we're looking back up at 115.77, the all-time high. And again, for the bears to have any kind of shift in momentum in their favor, we have to fail to break the all-time high and drop down and break the low of Monday. SMH, 2-day higher low has been set. We are testing resistance. That level is 153.95. Came pretty close today. And then the all-time high is right behind it. So as long as we hold that low of Monday, bulls keep complete control in the semiconductors. The VIX, dropping down but still holding 29.30. So that's the last level. If that level breaks, daily lower high, lower low, getting follow through. Still looking for a weekly higher low compared to 23.50, but there is no sign of it forming at this point. We would have to hold 23, make that 29.30, and break 37.10 to change the daily trend from here. Gold bulls got follow through. And one of the first things I typed this morning when I woke up at 6 a.m. was volatility incoming on metals. And why could I say that? Because this 4-hour time frame was trading straight across. So I wasn't going to predict whether it's going to be a bull break or a bear break. If you forced me to, I would pick bull because of the prevailing trend. But technical analysis helps us say volume and volatility are incoming. And I'll say that right now on SPY. Volume and volatility are incoming on the S&P 500 second week of July. Most likely. I never really hammer down times because it doesn't matter when it happens, but it all depends on how long we continue to tighten. But I'd be watching. Maybe next week. Maybe towards the end of next week. We'll see. Doesn't matter when, but we know it's going to happen. So that was the case for gold. We got the bull break. And again, I'm just not interested. You know, the big bull break today on gold resulted in GLD being up 0.5%. So I'm not going to tie up my capital in swing trade positions that are seeing that kind of volatility. That's just my decision. If you are a less active trader and you're not day trading daily, then maybe you do want your money tied up in something that is in a nice steady uptrend. Silver with the bull break as well. Nice strong close. I guess we haven't closed yet, but we're looking up at 1840 as key resistance, and the miners have really benefited because, again, green in gold and silver 2 days in a row, and solid green in the S&P 500 2 days in a row. That's the best case scenario for the miners, and they're exploding. So daily higher low set on 34.08. Bull break over 35.84, and now we're looking right back up at 37.49, the highest price we've seen on this bull move. That's back in play thanks to both the metals and the markets going up at the same time. I am cautious oil. I am not aggressive enough as a bear to be making bear entries, but I certainly don't like bull entries up here. And I'm watching for a break of 37.08 to be the most significant shift away from the oil bulls that we've seen since the low. If that level holds, then bulls keep control. So it is all about 37 from here. Resistance, 41.63. And again, it's not your ideal head and shoulders, but it's roughly there. If we fail to break the high and then roll over and break the uptrend, it's pretty much, what I care about head and shoulders patterns is going from higher lows and higher highs to lower highs and lower lows. It's just a trend change. Some people visualize it better as a head and shoulders, but it's just a trend change. And pull up the 2-day time frame, it would be a failure to break resistance for a lower high and then a break of support to confirm the downtrend. Natural gas getting some follow through. So the spot price for natural gas broke the daily lower high resistance of 1,654, but the August futures contract for natural gas and UNG did not. So if UNG rejects from 1047, it's a lower high, and we'll then be watching for the potential of an inverse head and shoulders, which again is a change in trend from lower highs and lower lows to a higher low and higher high. It's just a trend change. So we need a daily trend change on UNG, and it's potentially shaping up in an inverse head and shoulders pattern. What I like about inverse head and shoulders is when their necklines are close to each other and we potentially break two resistance levels at once. Trading today, what did I do? So just babysitting my QQQ position. I did take a bearish entry in NVDA. This is my ideal top fish on NVDA. So I see the NVDA bull starting strong, and I see an extremely strong move out of the gate, getting very overextended on the 5-minute time frame. And I say, okay, we're overextended. Where's our next resistance? I zoom out to the daily. I look at the daily resistance, and that was 380 and 380.20 from last Friday and Thursday, a double top. And I say, okay, the 5-minute RSI is sky high in the 90s, maybe not, upper 80s, heading to that level. The hourly time frame certainly getting extended. The 15-minute time frame overbought. That's my kind of top fish or bottom fish. All out dump, playing off support, huge bull move, playing into resistance. Why am I playing counter the trend? Because my risk is tiny. I made a bearish entry at 379.80 or so, and I put my stop at 380.41 because the top was 380.20 and I want to give some wiggle room. I missed getting stopped out by 3 pennies. From there, on this pullback, I exited half of my position, kept the stop on the second half above the high of the day, and I now have 0 risk. So if we pull back for hourly consolidation, I have a solid win. If we get, the market drops out of nowhere on news, I get a solid win. And if the bulls keep the uptrend and keep the momentum that they have been keeping for 2 days, nothing happens. I lose nothing. So I love those kinds of very low risk plays because, again, I only have to have really 1 out of 4 or 1 out of 5 be successful to have it worthwhile. So in this instance, rather than locking in profit on the second half of the position and locking in a 3/4 of a day maker or half a day maker, I ended up just leaving it because the 4-hour time frame was getting a bit extended and I wanted to give the possibility of further pullback. In the end, I did get stopped out, break even, no biggie. Next time, maybe the bears follow through and I get a 2-day maker while risking 10% of a day maker. So again, if my risk is, let's just use this as an example. If my risk was 80, my risk was 40 some cents, let's just call it 50 cents for a nice round number, and my reward potential ended up, in this limited example, without much follow through, my reward would have been $2.50. So that's a 5-to-1 risk to reward. And again, if I get 1 out of 4, if I get 1 out of 5 of those, I break even. If I get 1 out of every 4 works out, then I am ahead of the game. So I love low risk trades that have potential for much greater reward than is at risk. So that's that. I want to gap up open. Again, I'm mostly cash. I got my SPY no touch position. I'm cash. So I want a gap up open to be looking for bearish entries tomorrow. We'll see what we get. If we don't get that, and if the trade doesn't come to me, and if it's not clear, I'm going to sit on my hands and wait for the tightening daily range to break probably next week. That, along with the fact that we're heading into a long weekend, we can expect volume maybe lower on Thursday with Friday not trading, so might just be fairly done for the week. Might take some very small, low-risk trades. We'll see what we get tomorrow morning. Have a good rest of your day. Do good things. Hunk of mush.